All right, Max Porterfield, thanks so much for joining me, the CEO of Visionary Copper and Gold. Thanks so much for reaching out here recently and to talk about this base metals and precious metal space that has been a really hot story the last few years, really. Let's take some time to start out with what's your background, what's going on with Visionary, and then we'll kind of go from there.
Yes, certainly a little bit about my background as I was actually raised in South Texas, immigrated to Canada in 2019, or sorry, 2012. It's been a while. Became a Canadian citizen in 2019, but I took over Visionary in 2014 under our previous name, Calinex Mines. But started my career on the investing side of the equation, working for U.S. Global Investors, which is a natural resource centric fund, and then immigrated to Canada. And then, as I mentioned, took over what's now Visionary and set our sights for base metals exploration, cut our teeth in Manitoba, now shifting our focus to Newfoundland, where we've got a deposit that we acquired about a decade ago. And we're very excited to be expanding today. And so it's a strategic portfolio focused on Canada based metals, looking for high grade in particular in these known jurisdictions.
Okay, so give me your supply demand thesis for what's going on in the copper and gold markets right now.
Well, in the copper space in particular, because that's our focus is well, copper and gold. But in the copper space in particular, it's been a very challenging over a decade for exploration, and exploration is what ultimately feeds mine supply. Because without discoveries, you have nothing in development. You have definitely nothing in production. And it's been a challenging space to be an explorer in the base metal space, whether you're exploring for copper, zinc, lead, or any of them in particular. With that being said, that lack of exploration because of the challenging price environment, challenging excitement level, while other metals were hot, uranium, for example, lithium, you haven't had that love for base metals. So you've had a lack of exploration dollars going into the ground, which is a lack of discoveries being made. I'd argue that a lot of the easy discoveries have been found, is a thesis in general overall throughout the industry. And so explorers need to go to different areas of the world, look in different ways to make those discoveries. And while that's all going on, you've had declining grade curve around the world where you have existing mines that have been in production, and then they keep mining lower and lower grades. Good examples of that in Chile and Peru. Some of those open pit grades were starting at 1.5% copper grades when they started mining 60, 70 years ago. Today, you could be looking at mining 0.35, 0.25% copper. So again, you got declining grades, lack of exploration, which underpins supply. And then on top of what's going on now this year in particular, you've had a number of mine issues occurring all at once at major mines, whether it be seismic issues in the DRC for Ivanhoe mines affecting their Kakula operation. Freeport's mine, Grasberg, had a mudslide in it, another example. So there's a number of big mine supply issues that, again, will curtail things coming online that you just can't plan in, even if you're forecasting supply issues. I don't think anybody forecasts the supply issues that ultimately occur, particularly in this case this year. So on top of that, we had all the talkings, and you saw everything, the price action in the run on copper when copper was being moved from Europe around the world, really rushing into the United States to meet that tariff deadline. And that had actually had a profound impact on your above ground stockpiles of copper. U.S. Exchanges have more copper than both the London and the Shanghai exchanges combined, which is a unique circumstance because of that. And if you look at U.S. policy overall in terms of impact on mine supply as a whole, the shift to a question you didn't really even ask, but I think the Trump administration the U.S. administration that you've seen come on is the first administration that I've seen in my lifetime that's focused on mine supply. Historically, presidency after presidency after presidency, if they're focusing on resource supply for the United States economy, that's been dominated by oil and gas until, again, the fracking revolution in the United States made U.S. a net exporter of oil and gas. And so, for the first time ever, if you look at trade deal after trade deal, whether it be a recent trade deal that the U.S. had with Japan, Australia, Ukraine, the ambitions they mentioned in Greenland, of course, it all underpinned critical mineral supply for the U.S. economy. So it's interesting to see how the tariffs played on that above ground stockpile, how the U.S. administration's looked at mine supply in a strategic way as they look to renegotiate the different trade agreements with different countries, and then really a decade of lack of exploration for these base metal lines as well mines, as well as declining grade curve is going to be impacting the supply demand fundamentals at a time when the world's really focusing on the AI revolution, battery revolution, and the infrastructure build out in whether it be in the United States, rebuilding of infrastructure, or the One Belt, One Road initiative that you see going on in China, or Saudi Vision 2030, which is, again, on all aspects of their economy, looking to grow it in different ways. And critical minerals is definitely earmarked to that as well.
So, how has that change in the shift in the Overton window from this new administration down south impacted your outlook with this new project in Newfoundland and your existing projects that you've got?
Well, in terms of our existing projects, we're all in on Canada in terms of our allocation, in terms of our portfolio. And it's always with the long term vision that you wanted to be in proximity to infrastructure in a tier one jurisdiction, where you've got a rule of law, where you're able to clearly advance things. And that is one of the things that underpins a lot of the delays outside of just exploration, but on the development side of things, not just something in Canada, the US, but across the board is the timelines to get stuff into production. I think that being located in Canada is going to be, and being the closest trading partner to the United States is ultimately going to be very, very beneficial. The weak Canadian currency versus the US dollar is also something that's very beneficial, operating in a Canadian dollar and selling your production in a US dollar type of operation. And then ultimately, being in a position to be a critical mineral supplier in a very low cost way relative to others, given where our infrastructure is located, as well as in an opportunity if rule of law prevails and you've got a permitting regime that's supportive of that, in areas where you can fast track a discovery through to production very, very quickly, where it's not so remote, infrastructure dependent. In terms of new infrastructure being built out. So, again, the opportunities in front of us in Newfoundland. In Newfoundland, we've shifted over there. We've got a large gold, copper, zinc deposit called Point Leamington. It's had really some big names of held onto the property, have explored it historically, and no one's done exploration on it since 2004. So as we turn to it the first time for ourselves, we're fully permitted in Newfoundland. Newfoundland's a great jurisdiction, or like it's top 10 globally year after year on the Fraser Institute, which is a survey that really ranks different mining jurisdictions around the world. And we've got an exploration model that, if proven successful, will lead to dramatic resource growth on a per dollar basis with the effective use of the drill bit and the near surface targeting that we're going to be doing there is a really unique opportunity. In the meantime, in Manitoba, we actually have one of the highest grade copper discoveries in the world. It's located about a 30-minute drive by existing all-weather road access from a community known as Flin Flon, Manitoba. It's built on mining. It's got existing infrastructure, hydroelectric power, and we're in permitting there. That's a little bit extended right now due to Manitoba's need to consult some First Nation communities that have arisen. So we'll be patient with that is addressed, and as Manitoba does the duty to consult. And in the meantime, doors wide open for us in Newfoundland, fully permitted there. And then beyond that, always looking to add to the portfolio, but certainly be focused on jurisdictions that want to see discoveries made. And not only do they want to see discoveries made, but they're supportive of mine development, because you can make all the discoveries in the world, but if you can't advance them, there's really no value creation at all.
And is that Visionary's MO, or are you trying to both explore and then also take these things to development, or do you end up selling off assets as they get to a certain stage?
We'd look to be able, I mean, it's a case by case basis, but we'd certainly look to partner with a larger player that would be able to fast track some of these discoveries to a production decision. And that's again within proximity to infrastructure, leveraging that existing infrastructure, whether you be in Manitoba, whether it be in Newfoundland or anywhere else that we would go to explore. So we take things as an opportunity present themselves. I mean, obviously our skill set and bread and butter is on exploration and delivering with the drill bit, but we do have individuals on our team that allow us to do the work on more of the development standpoint, that allow us to fast track the permitting For example, in Manitoba, we've already completed the engineering work, the baseline environmental studies, and all that work necessary to facilitate an advanced exploration permit, which would allow you to advance with a bulk sample and ramp down to the deposit. So we've started the early stage engineering environmental work that's necessary. Technical team has built some of the biggest VMS mines in Canada. We've got metallurgical skill set on the team as well. That's some of the most skilled metallurgists in terms of gold recovery, and past experience with Barrick and many others, and have a good track record to speak to that. So again, we're gonna stick to our core competency with the drill bit, but then also add those key players to get that work done, so that we could cut those timelines. Again, with withstanding the fact that we are part of the bureaucracy wherever we operate, and put us in a position to transition these assets from discovery to production very, very quickly. And you can do that again where you don't have long lead times with permitting, as well as where you already have pre existing road access, power, water, all those things cut down your timelines and your upfront capital costs. And that's, if you look at our portfolio, makes us really quite unique. Aside from our team, our tight cap structure, but all of our assets are focused on proximity to infrastructure in tier one jurisdictions.
That seems to be a major catalyst for a lot of folks that I'm talking to, is that everyone's going further afield to find these deposits, right? So you've got Manitoba, you've got Newfoundland. Obviously, there's some major differences between the bureaucracies that you're having to deal with. You mentioned what's going on in Manitoba. What have been the constraints that you've experienced in Newfoundland with this new project?
None. As
Really
a
interesting. That's amazing, isn't it?
and I'll cater that experience to to the statement that we haven't started and kicked off our exploration in Newfoundland. But in Newfoundland, much like how Manitoba used to be in terms of permitting timelines, we submitted our permits and we received our permits within 3 weeks, 4 weeks for initial ones. We submitted an amendment to permits on adding some additional drill holes, and those were accepted and approved within a couple weeks' time. And that is supportive of having a permitting regime that's supportive of exploration, mining overall as an industry, and it's not to say that they're cutting corners. It's just a very, very streamlined, methodical permitting process. And you follow the process, you get your permits, and you're allowed to move forward. And so, again, that's why they've ranked in the top 10 of mining jurisdictions for over a decade now, at least in that Fraser Institute. And we also have been approved for up to $150,000 in grants from the government of Newfoundland in support of kickstarting exploration at our Point Leamington deposits. In terms of Newfoundland, it's been a great jurisdiction to explore and operate in. When we explored in New Brunswick as well, they've been very supportive of us in our assets there that are more zinc lead dominant, but still within the portfolio. And in terms of Manitoba, we'll just be patient as they address what they need to address and support the timelines that they've outlined, and just kind of follow through as we would anywhere else, and get excited when we get back with a drill bit when we get back there. But in the meantime, we see significant value creation coming from our opportunity in Newfoundland, and in many ways, kind of light on a tremendous opportunity that oftentimes I pinch myself and question why not sooner. So I'm itching to get the drills turning in Newfoundland with the rest of the team here, and it's a great jurisdiction, and Newfies are really warm people, and I think that's where you got a lot of respect for people, is positive mindsets meet to positive outcomes, and they've as a whole been a very positive community to deal with.
That's really interesting. I'm curious. I'm much more curious about Newfoundland, and in particular the copper and the zinc play. Obviously, everyone knows the huge rush on gold that's going on because we're in a multi-year bull market in prices. We haven't seen the same run up in copper, but can you talk about copper and zinc, and what you might be able to find in Newfoundland that will add to Visionary's total haul?
Yeah, certainly. So in terms of, you asked me on gold. I mean, we're in a big bull market for gold. Gold had a huge run up. I think long overdue. What's unique about the metals market, particularly with moves in gold, when you have big significant moves in gold that are supported by, I think, macro fundamentals that have been long overdue, with the debasement of the US dollar, the currency, really the pattern of the world. And you've seen a rush into these cryptocurrencies, obviously notably the performance that you've seen in Bitcoin, whose price action in Bitcoin has dwarfed any kind of move that you've seen in gold. Everyone has a quickly run for the hills mentality with gold. Now, certainly, gold has had a multiple standard deviation move out of its norm relative to its historical price action. And in those type of moves, you see a reversion to the mean, which is what you are seeing. Of course, you've seen a pullback on gold, but this is a secular bull market for gold, no different than what you saw in the 1970s in many ways. And a lot of the demand drivers for gold are very much in place for that, as well as, I think the supply side is, supply is going to respond, whether how quickly it can respond, we'll see. But it is, like Bitcoin, similar, there's only so much gold that can be mined so quickly. When you get a big rush on anything, it's the supply demand fundamentals favor higher prices. Now, going back to your question in Newfoundland, I'm obviously pumped up about exploration in Newfoundland and in the opportunity to build a robust copper zinc resource, as you noted there, is significant. So if you look at the current resource right now, and this is a 43101 compliant resource, and just in terms of a pit constrained in bringing together the indicated and inferred categories for clarity's sake, you're looking roughly about 100, I'm sorry, 500,000 ounces of gold pit constrained with 170 million pounds of copper and 700 million pounds of zinc. So again, that's a significant near surface resource and highlights the polymetallic nature of these VMS deposits that we've focused on here in Canada. In terms of exploration upside moving forward for the property, we have a keen focus on copper, as our name is obviously highlighted. And in terms of the opportunity there is they've historically was discovered in 1971, the deposit. It was held by Noranda for about 25 some odd years until they divested it to a company called Rubicon, who immediately optioned it to BHP. BHP is a giant company. The sheer fact that they optioned the property says a testament to the potential, because they wouldn't be looking there unless there was something very large to have an impact on their balance sheet and their operations before returning to the offshore in 2001. The last exploration on the property was in '04, where the company had success in expanding the property, the deposit to the south, and then stopped. When we've taken it over, we looked to update the resource, which we did. And then when we've relooked at the opportunity there, there's a significant airborne anomaly further to the south, which would support the extension that the Point Leamington deposit could extend to the south along strike. These deposits, the size of them typically are indicative in terms of their strike extent. So the longer the strike extent of a VMS deposit in a lot of these Canadian camps or districts, the deeper they go. And so Point Leamington already has a strike of over 500 meters, and 200 meters is the strike of some significant discoveries. So it's already at 500 meters, and we'll be testing to see if it goes over a kilometer. In addition to that, there's these VMS deposits occur in stacking in different lenses. And so far, what's been outlined is more of the zinc dominant lens. And there are a number of holes that have intersected a more copper dominant lens right nearby the known Point Leamington deposit. It's currently encompassed in the known resource. So we'll be targeting, again, the extension to the south, this stacked lens of mineralization that could be very much copper rich that you see in a lot of these other major systems, and also the Point Leamington at depth. And that's where we see significant resource growth, fundamentally focused on copper, certainly going to get that zinc, and hopefully intend on getting some more gold to come with it, of course. But the focus very much is growing Point Leamington to a tier one VMS deposit in a tier one jurisdiction in Newfoundland and take off where exploration left off in 2004 with a lot of success, but would just lack the focus. And that's what we're going to come and deliver this year.
So there's potentially a pretty big deposit here. What are some milestones that you could outline for potential investors or existing shareholders as well? Like, you're raising capital to try and to get this built out. What are people looking for, and what are some timelines on those milestones?
Yes, certainly. And so, and I'll get to those milestones. And I think it looks to look at a similar situation. If you look at the nearby Firefly Metals Ming deposit, that's a historic deposit there, but they started off historically at Rambler Ming 4 million tons. And there's been a big advancements in these VMS deposits, drilling technology, the ability to vector at depth, drill at deeper depths. And today they've expanded that deposit to over 50 million tons, following that deposit down the strike and going at depth. And at Point Leamington, we're starting with a 18.5 million ton pit constrained resource there that starts right at surface that remains open at depth. So again, these deposits about not about why did they get stopped. Often it's the timing of metals at the time, the focus of the company at the time, big delays. In our instance, we've been focused on cutting our teeth in Manitoba with our high grade discoveries there. And the opportunity is to revisit these assets and then add value to them. In terms of the focal point, or in terms of milestones over the next 12 to 18 months, we want to kickstart exploration on the property with phase one. Phase one campaign is going to be budgeted to test again these different key target areas. Some of them that I mentioned to you in highlighting the opportunity at Point Leamington. That's going to happen immediately. In addition, in phase one, we'll be taking metallurgical testing of different various areas of the deposit, and the testing will be used later in terms of doing some work now that's going to help in the future on the more of the development side of the equation is getting that met work done, and that will refine the recovery of the different metals in the deposit as we do that test work over the next 12 to 18 months. On the exploration side of things, we'll be funded to immediately follow up on terms of phase one results. And that will be in terms of phase two and beyond, step out and delineation drilling based upon phase one. And so again, you start with targeting, you get into the targets, and then you expand the mineralization where you're successful in your targeting in phase one. And that's where you're going to get rapid resource growth over the next 12 months is delineating the discoveries in what we've identified for that resource growth in phase one later that's going to occur immediately. So that's going to be the focal point is we're looking to get into the area with exploration in phase one, targeting these key areas of the Point Leamington deposit, and then based upon those results, immediately start delineating, step out drilling over the following 12 months' time. We have constant news flow with those drill results, which will culminate into an updated resource. And then that updated resource, alongside the metallurgical work, can be used then to publish a preliminary economic assessment that we can outline to the market that will quantify the potential early stage economics based upon that much larger updated resource that we will have outlined through this exploration work.
Okay, so how should investors judge this over the next year or so?
In terms of judging is based upon the drill bit. As with anything else, it's valuing adding value through the drill bit. And so again, as we outline the results from phase one, phase two, also testing targets along strike that we've identified, those results in the material and the mineralization that we intersect in those results will be indicative as we navigate the path forward for us in Newfoundland. In addition to that, we'll continue to be patient with the permitting in Manitoba, as well as we look to uh, begin permitting some of our gold dominated exploration projects in Manitoba. So we're going to, again, results are going to follow with the drill bit. All focus, all exploration dollars are going to be, again, on delineating, outlining additional mineralization at Point Leamington. And then in terms of Manitoba, we'll continue to be patient, maintain the permitting and address that as it comes, as well as to unlock new opportunities in Manitoba. For example, we've got a historic high grade gold mine that sits not too far away from our high grade copper that is, again, not been followed up since 1937 and 1939 when it operated. And so that's an opportunity that sits within the portfolio that when it becomes ready can be very, very compelling to advance ourselves, to spin out under our subsidiary, a Sowie brand, uh, or again, divest in whatever might make sense at the time once we get to that stage.
It sounds like Manitoba is becoming a bit of a challenge right now. How does this get resolved? How long do you think that that ends up taking?
Listen, I think we take things on a case by case basis. Manitoba is a jurisdiction that always has had the pedigree to host some very, very significant discoveries. And I would also argue, not argue, but I mean, just state the facts that I think that not all areas of Manitoba are the same areas of Manitoba. So that's why I look at Manitoba as a case by case basis. You know, while we might be delayed on one project at Pine Bay with the high grade copper, we won't let us deter us on our long term ambitions for the province as a whole. So again, we remain very, very optimistic for the province. And if there's delays, we're optimistic that rule of law will prevail, and that we will respect all parties as we go through that due process. If we were to encounter them in the future in any other location, or continue to encounter that situation at our flagship in Manitoba, being Pine Bay. For example, in other areas, It's, you know, we've got another property called the Island Lake Project. It encompasses 70 kilometers of the Island Lake Gold Belt in east central Manitoba. And that is an area where the traditional lands are Garden Hill First Nation. It's very, very clear that's outlined. And so, as we've looked to potentially explore that area, we've immediately looked to establish that relationship with the Garden Hill First Nations and show them respect that they do deserve, and see where that relationship goes, and that's to that is how it should be done. So we'll continue to operate in that way, and then respect the bureaucracy and the government of Manitoba's process as we address permitting hurdles as they arise, if they are to arise in any other area of Manitoba. To write off the entire jurisdiction, we're certainly not doing that. To turn our back on our significant investment in our long term ambitions for the community of Flin Flon, we're certainly also not doing that either. We're simply focusing our capital to where the capital is welcomed and is certainly warranted with the exceptional opportunity to grow Point Leamington to a tier one asset. And again, what is rightfully earned as a tier one jurisdiction in Newfoundland for base metals and beyond. So, continue to be excited to explore Canada, and then address any hurdles that arise as they arise with respect, as it should be done no matter what.
Yeah, so let's shift gears a little bit. This is obviously not your first rodeo. You've been in the metal space a long time. What can you tell us about what's going on in this cycle in comparison to previous cycles that you've been through, and the things that lead you to be so optimistic about the future?
Well, I mean, at the end of the day, this cycle is going to be one for the record books, in my opinion. And again, I'm not a surfer, but in another life, when I was a surfer, I always say we're looking to catch the big wave, and you see the wave coming when you're looking to surf and ride the wave. And really, in many ways, commodities are a very cyclical business. You got to ride the wave when the wave comes, and you want to have a surfboard ready, paddling to catch the wave. And so that is really what Visionary was built on, that long term mindset. And in terms of what's driving this is going to be government policy. And government policy has historically been a big driver of base metal demands as well as technology, whether it be the Industrial Revolution, the interstate build out in the United States during the 1950s. If you look at the Chinese systematic build out of their infrastructure in the mid 90s, early 2000s, which really led to the last super cycle. This cycle that we're coming up against is going to be driven by a number of different factors. Again, rebuilding of the infrastructure in the Western economies, it's long overdue. The continued build out of the One Belt, One Road initiative by China, and that infrastructure program is one the world's never seen before. The continued diversification of the economies in the Middle East. You see a lot of people in the big diaspora from Europe, to a lot of people moving from Germany to Dubai. It's incredible. Stockholm to Dubai in these different financial centers in the Middle East is pretty profound. And then on the AI revolution, the sheer vast amount of metals that are required for these different data centers, the electrification of the world, and the demand for base metals as the world looks to shift away from the hydrocarbons, which, by the way, I don't think is going to be a long term a fundamental driver. I don't think that's something that is going to be forever, where the world's going to not always take such a negative viewpoint against the oil and gas industry, but certainly it pays to be in metals right now. And then the U.S. policy and U.S. administration for these metals is really going to shape the way these metals are sourced for the U.S. economy. And I think it's also changing the different trading relationships around the world in a profound way. And I think that's something that ultimately for the U.S. economy is probably healthy, given that I think that it really held a lot of vulnerabilities for that country, not having that mine supply. So we're in a unique space, a unique time around the world. Ultimately, a lack of investment into exploration is going to underpin supply issues, which again, you can talk about demand, demand, demand. But if you have all the supply in the world, the demand doesn't really make a whole lot of difference. And again, it's really a supply side story for the base metals, because you've got profound amounts of demand being poured on to base metals for one reason, precious metals for completely different reasons, and a little bit of overlap. And then at the same time, you simply don't have the mine supply. If you look at copper supply, not to go on and about copper, but right now, they were forecasted to be in a supply this year, and now that's shifted because of these mine supply constraints. into a deficit. And if you look at next year, where they look to have, historically, some growth. I think it was before this year, about a 2.5% growth is forecasted. I think that's now been revised down anywhere between slightly negative 0 to 1.5% growth in terms of copper mine supply. That's being offset by a 6% increase in secondary recycled copper. And so, again, you've got to question to yourself, what are the likelihoods that all this supply growth, where they think it's going to come from, is going to come, and where they when they anticipate it is going to come from comes. Like the mine supply issues, obviously you can't forecast that. But then, how realistic are you going to have a 6% growth in recycled copper supply on the secondary? And then, if you miss that mark, what kind of impact is that going to be on your overall mine supply again? So it's a very, very tight rope the world's walking, I think, in mine supply at a key time, and it's a very, very exciting space to be in. And it's catching the big wave at the right time, early on in the cycle. Because while it has been an exciting couple years, I think the excitement's just started for us in many ways.
And it does feel like there's a shifting sentiment around the ESG side of this and willingness to expand some of these mines, right? We've just seen pretty big personalities like Bill Clinton and Bill Gates walking back some of their long held positions on the environmental side just in recent weeks. So it's possible that these things get expanded as that Overton window shifts with the existing U.S. administration still having, another 3.5 years in office. That's a long time to shift the discussion and in your favor. Obviously, the macro outlook looks, but you've laid it out really well. I think a lot of investors are looking at some of these base metal prices going, this stuff just kind of has to go up, doesn't it? In order to get some of these supply constraints dealt with. What do you look at as far as a timeline on how this might look from your standpoint, but also from an investor? We're looking 12 to 18 months out. What kind of things should we expect from the base metal markets over the next year and a half?
I I think it's gonna be pretty volatile and rocky ride like everything else. I mean, there's gonna be a lot of exciting moves in the space, and I think that any kind of pullbacks should be faced with less of that fearful mindset that a lot of people seem to have, and kind of understanding. And when I worked at U.S. Global Investors and started my career there, I have a lot of respect for those folks, and Frank Holmes, that runs that shop, for the kind of the mentoring that he gave and continues to give in my career. But one of them was anticipate before you participate. And there's the volatilities. I mean, I certainly anticipated before I participated on this long journey at Visionary, because there's different roadblocks that you get, and you need to be aware of those roadblocks or those pullbacks that you have. No different than you have a setback in your exploration model, doesn't pan out, and you don't hit what you thought you were going to hit. And then you got to retweak that. It's not giving up, being resilient, and understand where you are in that longer term process, because things don't happen overnight. Things don't go straight up. They often say that, when you're riding a bull market, you're riding a wall of worry. So, as we have these exciting moves like we've had in gold, and then we've had some sleepers like in the zinc space, more or less, more recently, is that when these moves happen, it's okay to have a healthy pullback, and then use those opportunities in your favor. In terms of Visionary's case, this is a longer term journey on building a base metals company through the discovery process. But the biggest opportunities have always come for me, in using these downturns to increase my position. And that's just being a smart investor, whether you're buying any asset, is use the volatility as your friend to create opportunities, and not as such a negative part of the process. Because when you have these pullbacks, it's funny. You'll have everybody euphoric, and then you'll get on the phone, and then all of a sudden, because there's been 3 days of red on their screen, it's like Chicken Little, or the whole world's falling, the sky's falling, and then you really got to put that in perspective. And I know, psychologically, you feel losing a dollar 3 times as much as you do making a dollar. So I know why that happens, but I would certainly say that putting perspective on the longer term position that you hold or that you're building, as you get this different volatility drawdowns, and realizing that it's just a choppy, longer term bull market, and you're looking to catch that big ride wave, and you got to ride it.
Yeah, absolutely. I think that's a fantastic way to put it. Most investors do feel the pain of the downturns, 2 or 3 times more than the upside. And it's really hard to enjoy any bull market, right? I find that as soon as things start going into the green, people are skittish. It's nice to see so much skepticism right now because it does suggest that we are far from the top of a lot of these different underlying things that are going on. But maybe to end off, one of the things that we were talking about at the beginning is, you're in exploration phase. You need to you're in capital raise mode to try and get this thing to fruition. Where are you finding capital markets are right now, and what's it like being out there, on the road talking about raising money for a project like this? Because you're not the only game in town. There's a lot of people talking about this. So how do you differentiate yourself?
Well, first of all, I think it pays, in any given moment, there always is going to be this aspect of, oh, there's a new shiny object. Let's go look at that new shiny object, right?
Yeah.
And when you have a big move and you're in an area that can draw a lot of capital very quickly, there's a lot of new perceived shiny objects that show up very quick. That I think cloud, certainly the viewpoint of a lot of new entrants into the space. They market a lot of different things, and they don't know how to differentiate in terms of what is what versus that. But ultimately, um, it's tried and true in terms of a quality asset base, safe jurisdiction, proximity infrastructure, and a value investor looking at the true value that underpins the asset and the company. And then above and beyond that, having a strong team that's delivered discoveries before in the past, looking to replicate that success as we have it within our own team historically have shown a path record, a track record of discoveries. And then also a tight cap structure. Again, having just over 19 million shares outstanding, and again showing a track record of respecting the cap table, shareholders' money, to where after 7 years of in raising over 25 million, to have only they still have 19 million shares out, I think, points to that respect to the shareholder and being a large shareholder and having our own skin in the game as management. I think it speaks to that. I mean, at the end of the day, no matter what you're doing, if you're really, really passionate about it, you'll find the right people and they'll kind of gravitate towards you. And that's part of the process. And no matter up markets, down markets, it's always a competitive race. And I think money always will ultimately flow where money is respected and has opportunity to grow.
Yeah, capital flows where it grows, right? That makes sense to me. Max, I appreciate you taking the time. I know you're a busy guy, and it's really interesting to hear the story of how pro Canada you are on this space. Thanks for taking this out of your schedule to talk to me about this today, and it's fantastic to get the chance to meet you.
Likewise, likewise. Thank you so much for inviting me to be here today and let me share our thoughts and certainly my views on the overall markets and the vision forward for visionary copper and gold moving forward.
Awesome. Thanks so much. Thank you so much for listening or watching today, and please find us at helmfinancial.ca to connect with me and my team. Information in this podcast is from sources believed to be reliable. However, we cannot represent that it is accurate or complete. It is provided as a general source of information and should not be considered personal investment advice or a solicitation to buy or sell securities. Raymond James advisors are not tax advisors, and we recommend that clients seek independent advice from a professional advisor on tax-related matters. The views are those of the author, John Helm, and not necessarily of those of Raymond James Limited. Any investor should consult with their investment advisor to ensure that it is suitable for the investor's circumstances and risk tolerance before making any investment decision. Securities-related products and services are offered through Raymond James Limited, a member of Canadian Investor Protection Fund. Insurance products and services are offered through Raymond James Financial Planning Limited, which is not a member of the Canadian Investor Protection Fund. Raymond James USA Limited advisors may only conduct business with residents of the states or jurisdictions in which they are properly registered, and Raymond James USA Limited is a member of FINRA SIPC.